Hello everyone, I'm super excited to be your online tutor. Most of my students call me Mr. Accounting 101. Maybe to give you a bit of my background, I've been teaching accounting for 12 years at a high school level and for 8 years at a tertiary level. When I was 16 years old, I discovered that teaching is my passion and I love nothing more than helping students develop their skills and achieve their academic goals. So the paper we are doing in this video is 2019 March Common Test. And I will do question 2. So without further ado, let us kill this question. Question 2 is out of 19 marks and the time allocated is 11 minutes. In this question, we are tested on the cash flow statement. You are provided with information relating to Babanango Limited for the financial year ended 28 February 2019. Required 2.1. Calculate the following amounts that will appear in the cash flow statement on 28 February 2019. So 2.1.1, we are required to calculate the disposal at carrying value. So this is for 5 marks. So guys, we are provided with the answer book that we're going to use to answer the question. So we are doing 2.1.1 disposal at carrying value. To calculate disposal at carrying value, we use the following format. So we take the carrying value of fixed assets at the end of the year. We add depreciation for the year. We subtract fixed assets purchased, or we can say added during the year, and we subtract the carrying value of fixed assets at the beginning of the year. So this is the format that we follow to calculate disposal at carrying value. So now let us check if we do have this information in the question. So in the question we are given information A and B. So information A, here we have the extracts from the income statement, and in information B, we are provided with an extract from the balance sheet. So in this balance sheet extract, we are given comparative figures, which is 2019 and 2018. So it's current and previous year. So guys, we know that 2018 balances will become the opening the following year, which is 2019. So in 2018 column, we have the opening balances. And in 2019 column, we have the closing balances. So we have opening and closing balance. So guys, our focus here is on this line, fixed assets line. So in the balance sheet, we are given the value of fixed assets. So guys, always remember that in the balance sheet, we record the assets at their carrying amounts. So these balances are carrying values. So we have the opening and the closing balance. So the opening balance is 1.6 million and the closing balance is 1,689,000. So now we can take these balances because we need them here. So we said we take the carrying value of fixed assets at the end. And we have seen that the closing balance, fixed assets closing balance is this one, 1,689,600. So we have 1,689,600. And we have the balance at the beginning, which is 1,600,000. So this one is negative. So in accounting, we indicate negative balances by brackets. So every time when you see the bracket, it means that the balance or the figure is negative. Now we need the depreciation amount. So depreciation will be given in the income statement extract. So here we have the depreciation at 270. So the depreciation is 270. So we add depreciation, 270,000. So now, do we have fixed assets purchased or added during the year? So we're gonna read additional information. So additional information will tell us if we do have any fixed assets that was acquired or added during the year. So this is part C, which speaks about fixed assets. So let us read this part. Extensions to the warehouse were completed at a cost of 800,000. So we decided to extend our building. So warehouse is a building. So fixed assets were extended or were added at a cost of 800,000. So some assets were sold at a carrying value during the financial period. So we are also told that some assets were sold at a carrying value. So we do not know the value of the assets that were sold. Hence, we are being asked to calculate disposal at carrying value. So we want to find or to get the value of the assets that were disposed of during the period. So we know that the value of assets that were acquired or extended during the year is 800,000. So we subtract this one. So we're gonna put it in brackets, 800,000. So guys, we are done. Now we can type this in the calculator as it is, and we will get the value of assets disposed of during the year. So we have 1,689,600. We add depreciation of 270. We subtract 800,000, and we subtract 1.6 million. So I am getting 440,400. So this is the value of the assets that were disposed of during the year. So it's the carrying value of the assets disposed of during the year, 440,400. So guys, that is how we get the 5 marks. For 2.1.2, we are required to calculate dividends paid. So I will show you the notes that we follow to calculate dividends paid. So here we take the amount due at the beginning. Due at the beginning of the year. We add total dividends. So guys, total dividends is the combination of interim and final dividends. And we subtract amount due at the end. So guys, this will be given in the question. So now let us go back to the balance sheet extract. So here you can see shareholders for dividends. So shareholders for dividends, we have the opening balance of 870 and the closing balance of 1,100,000. So this closing balance is the final dividend. So it's the amount for final dividend declared. So this one is the final dividend amount. So we have the opening and closing balance. So amount due at the beginning is 870. So at the beginning, we have 870. So now we want to get total dividends. So we said total dividends is the combination of interim and final dividends. So do we have interim dividends? We're gonna read additional information. So part D, let me read it for you. So part D talks about dividends. Interim dividends of 960 was paid during the financial period. So we do have interim dividends. It's given at 960,000. So we're gonna take 960 and add final dividends, and the balance is given in the trial balance. So I told you that this 1.1 is the final dividend. So final dividend is 1.1. So now when we add the two, the total is 2,060,000. So this is total dividend. So now we're gonna subtract the amount due at the end. So the amount due at the end, obvious, is the final dividend of 1.1 million. So we subtract 1.1 million. So this is final dividend, the amount due at the end. So now we can type this in the calculator. We have amount due at the beginning, 870. We add the total dividends of 2,060,000. We subtract amount due at the end, which is 1.1 million. So dividend paid by the company is 1,830,000. 1,880,000. So that is how we get that 3 marks. For 2.1.3, we are required to calculate tax paid. So the note for this one, we take the amount due at the beginning, amount due at the beginning, we add income tax, or you can say tax expense. So income tax from the statement of comprehensive income. So that is the tax expense. And then amount due at the end. Amount due at the end. So guys, for this one, I will give you the summary that will be of great help. So this summary will help you to master this note. So here is the summary. So number one, if you are told that SARS income tax opening balance is on the debit side, then the balance is gonna be negative. So you're gonna disclose that balance as a negative figure. And number two, if SARS income tax opening balance is on the credit side, then the balance is positive. So guys, we know that SARS income tax balance can be found on the debit side and can also be found on the credit side. So if SARS income tax balance is a debit balance, it means SARS is owing us. And if SARS income tax balance is a credit balance, it means that we are owing SARS. So if you are told that the opening balance is on the debit side and you are preparing the tax note, then you record the balance as a negative figure. And if you are told that SARS income tax balance is on the credit side, opening balance is on the credit side, then you record that balance as a positive figure. So this will help you to get your notes correctly. Number three, if SARS income tax closing balance is on the debit side, then the balance is positive. And lastly, number four, if SARS income tax closing balance is on the credit side, then the balance is negative. So guys, I believe you can know this summary by heart, so that even in the exam you can write it in your question paper before you attempt the note. Because if you do not understand this summary, you're gonna mess up things. I believe that this summary will really be of great help to many of you. So now let us finish up the notes, tax paid notes. So we said in this note, we first disclose the amount due at the beginning, and now we know that to determine whether the amount due at the beginning is positive or negative, it depends on whether the SARS income tax balance is on the credit side or on the debit side. So now let us check if we do have the balance in this balance sheet extract. So you can see here there is SARS income tax. This is the opening balance, 300,000. But the issue here, we are not told whether this SARS balance is the debit or credit balance. So now what should we do? So now we should be observant. So we can see that the SARS income tax balance is disclosed under current assets. So that is what we note here. So this balance is disclosed under current assets. So now I will add something to this summary so that you don't get confused. Number one, if SARS income tax balance is disclosed under current assets, it means that SARS is owing us, and this is a debit balance. So if SARS is owing us, the SARS income tax balance will be on the debit side. Or if they don't tell you that SARS income tax balance is debited, you will see that they will disclose the SARS income tax balance under current assets. So if they disclose SARS income tax balance under current assets, you should know that the balance is a debit balance. So SARS is disclosed under current assets because SARS is owing us. So it's like SARS now is one of our debtors, and we know that debtors are part of current assets. So number two, if SARS income tax balance is disclosed under current liabilities. It means that we owe SARS. It means that we owe SARS, and this is a credit by balance. So guys, I told you that I told you earlier that if we owe SARS, the balance will be on the credit side. SARS income tax balance will be on the credit side. So it means that the provisions that we made, they were not enough to cover the tax that was assessed by SARS. So we will, in this case, we will have a shortfall. So we will be owing SARS. So if they don't tell you that SARS income tax balance is credited, they will include it, or they will disclose it under current liabilities. So when this balance is disclosed under current liabilities, it means the balance is a credit balance. We are owing SARS. So guys, I hope now this is clear. So now back to the question. So we can see here that SARS income tax balance is disclosed under assets. So when SARS income tax balance is disclosed under current asset, we said this balance is the debit balance. And then the closing balance is disclosed under current liabilities. So we have SARS income tax closing balance of 200,000, and this balance is disclosed under current liabilities. So it means that the balance is a credit balance. We are owing SARS at the end. So at the beginning, SARS was owing us, and then at the end, we are owing SARS. So this one is a credit balance. Okay, so now we can do our notes. So we said in our notes, we first disclose the balance that is due at the beginning. So the balance due at the beginning is 300,000, and this balance is a debit balance. So is it going to be positive or negative? Now we're going to visit our summary to confirm. So we have the SARS income tax opening balance on the debit side. So this balance is what? Is negative. So when we prepare this note, we will disclose this balance as a negative balance. So we put it in brackets. How much? 300,000. And then we always add income tax from the statement of comprehensive income, from the income statement. So are we given income tax expense? So we do have income tax. So the income tax is 1,393,200. So this is the amount assessed by SARS during the year. So 1,393,200. 1,393,200. So we add this one, and then the closing balance is a credit balance of how much? So the closing balance is 200,000. So because this balance is disclosed under current liabilities, we said it is a credit balance. So we are owing SARS at the end of the year. So our provisions during the year were not sufficient to cover the amount that SARS wanted from us. So we still short of 200,000. So we are owing SARS 200,000. So this is a closing balance, and it is on the credit side. So in the note, are we gonna add or subtract this? Is this balance gonna be positive or negative? So if you are not sure, guys, always make sure that you visit your summary. So it's a closing balance. So this is the case. If SARS income tax closing balance is on the credit side, then the balance is what? Is negative. So because the closing balance is on the credit side, we gonna put it in bracket. It's a negative balance of how much? 200,000. So now we use our calculator to get the actual amount that was paid to SARS, which is an outflow of cash. So negative 300,000 plus 1,393,200 minus 200,000. So I'm getting at 893,200. So 893,200 is the amount that we paid to SARS. So now we have earned ourselves 4 marks. So that's how you get this 4 marks. For 2.0, 1.4, we are required to calculate the repayment of loan. So this means that we have reduced the loan liability. So let us confirm. So we have mortgage loan here. We are given the opening balance, but the closing balance is not given. There is question mark. So we must figure out the closing balance. So how are we going to calculate the closing balance? How are we going to get the closing balance? So we are going straight to additional information E. So additional information E. Here we are given financial indicators. We are given ratios here. So the ratio that can help us to get the loan balance is the debt equity ratio. So the debt equity ratio for 2019 is 0.3 is to 1. So now let us write down the formula for debt equity ratio. So the formula for debt equity ratio. That's equity ratio. So the formula is non-current liabilities divided by shareholders' equity. So NCL. So this is non-current liabilities. So guys, I don't have enough space. That is why I'm not writing this in full. Divided by shareholders' equity. So there is a division line. Let me put it. So this is the formula that we use to calculate debt equity ratio. So we take non-current liability divided by shareholders' equity. And in this trade balance, if you observe very well, you would see that the non-current liabilities is made up of mortgage loan. So only mortgage loan is included or is disclosed under non-current liabilities. So by calculating the non-current liabilities balance, we would be automatically getting the loan balance or the loan amount, because non-current liabilities is made up of mortgage loan. So now let us do substitution. We are told that debt equity ratio for 2019 is 0.3, and we do not know the non-current liabilities balance, which is the mortgage loan balance. We do not know this one, but we do have the shareholders equity balance. So shareholders equity balance for 2019 is given. So shareholders equity for 2019 is 2.7, 2,700,000. So 2.7. So guys, now we're going to do the cross multiplication. So there is a division line here. So now we're going to cross multiply. So we're going to take 0.3 and multiply this by 2.7. And automatically, we will be getting the loan balance. So let us cross multiply. 2.7 million multiplied by 0.3. So the balance is 810. So this is the loan balance for 2019. So loan is 810. So guys, we have figured out the loan balance for 2019. So here we should have 810. So at the beginning of the period, we were owing 1 million. But at the end of the period, we are now owing 810. So the balance we are owing has been reduced because we made a repayment. So the repayment that we made is of how much? So we're going to find the difference between 1 million and 810. So to get the amount that we repaid, we take 1 million, we subtract 810. So at the beginning, this is the balance that we were owing, and 810 is the balance that we are owing at the end of the period. So the difference is how much? So the difference is 190,000. So that is how you get 4 marks. So guys, I hope this is clear. So guys, when you are asked to show whether the balance is an inflow or outflow, this is what you do. So for instance, this loan repayment, when we make the repayment of loan, cash is going out. So this one would be an outflow. So we're gonna So we would put this in brackets because it represents an outflow of cash. And we have tax paid here. So tax paid, this is the payment again. So if you see that the amount has been paid, it means cash is going out, so it's an outflow. So this one will also be in brackets because it represents an outflow of cash. Dividend paid, another payment. All the payments, guys, they are outflows. So you put brackets here. And this one, disposal at carrying value. So here we sell the asset, we dispose of the asset. When we dispose of the asset, it means we sell the asset. So when we sell the asset, we receive cash. So now we are doing the last one, 2.2. What do you think the matured fixed deposit was used for? Comment on one activity and quote figures to support your answer. Okay, so we have fixed deposit. So at the beginning, the balance that was fixed is 1.8 million, and at the end, the balance that is fixed is 1 million. So our fixed deposit has matured. So the bank has paid us 800,000. So this is the cash that we received from the bank. So guys, this is an investment that we made. When you fix money, it's an investment. So after some time, you get back your money. So the bank has given us back 800,000. So that is why the balance fixed is now 1 million. So it has been reduced from 1.8 to 1 million because the bank has paid us the 800,000 that has matured. So now the question is, what was this 800,000 used for? So guys, here you just need to be observant. Do you remember that there were extensions that were made to the warehouse? So this is the information I'm referring to. So here we are told that extension to the warehouse were completed at a cost of 800,000. So this is not a coincidence, guys. So it means that the moment we received the 800,000 from the bank, we then decided to use the 800,000 to extend our warehouse. So here we can conclude that the matured fixed deposit was used for extensions to the warehouse costing 800,000. So that would be our conclusion here. So the matured fixed deposit was used for extensions. So it was used for extensions to the warehouse costing 800,000. So guys, how you get 3 marks. We are done with question 2. Guys, I believe this lesson have added so much value to your understanding. Please remember to subscribe to the channel, because by so doing, you are helping the channel to grow. So we really count on you for the growth of this channel. Let us meet in the next lesson. Love you all.